on budget investments ideas. It's from Paytm Money. So today we are going to talk about in this show about focusing on this year's big hits and misses in the budget. So we have with us Susmit Patodia, Amit Jeswani, Vishal Gajwani, Anshul Saigal, and I am your host Shanko Mukherjee. Susmit Patodia is a portfolio manager with MOSL, that's Motilal Oswal, AMC. Amit Jeswani ji, he is the founder of CI and CIO of Stallion Asset. Vishal Gajwani is the head of Alternative Investments Equity at Aditya Birla Capital AMC. And Anshul Saigalji is the head PMS and senior vice president with Kotak Asset Management. So this first question I'm passing on to all of you today. So though budget was flat, I mean, at least there are no big changes. The markets did go up, and that's secondary. But according to you, how did you feel the budget was? So I will start off with Anshulji.
Thanks, Shanka. Thanks, everyone, for being here. The budget, as the name suggests, is a matching of accounts. You know, it's revenues versus receipts, and then to cover up shortfall through borrowings. And that's what, if you see the last few budgets of this current establishment, that's what the budget has been really focusing on. Big decisions are taken outside of the budget. Even the large corporate tax cut was essentially taken outside of the budget sometime in August, September of 2019. And it has been no different this time. The budget has been really a matching exercise, not something that has spooked the markets in any way, and which reflects in how the markets have reacted. By and large, if you see the budget provisions, it's quite evident that the government is going for growth. And it is reflected in the capital expenditure of the budget, the revised estimate, the budgeted estimate of capital expenditure going up as much as 35%. And that also, in fact, the fiscal deficit number, which was expected to be lower than this, has been kept at 6.4 for next year, which again is indicative of the government's intent to grow. Clearly, the government is focusing on new technologies, newer areas for growth, is looking at out-of-the-box measures to really pump prime the economy, giving benefits to the VC private equity sector, benefiting the social sector. The Nal Se Jal scheme has an allocation of as much as 60,000 crores. Even border areas have got a significant allocation. Enhancement of allocation to roads. All of these are very positive developments and growth-oriented developments. So one would give a thumbs up to this budget in terms of its growth outlook, because that is what for really job creation, and that's what really the government is going for. Shanka.
Great. So thank you. Vishalji, can you tell us like what were some of the things which you were expecting and didn't happen? Your expectations from the budget and it did not happen.
Oh, interesting. So I think the expectations going into the budget were not pretty high in terms of any big bang reform. This government has been in power for quite some time, more than 6 years running. And whatever big bang reforms they had to do, they have already put them into place over the years. And therefore, what we saw this time around was continuation of the policies announced in the past, which have continued in this budget as well, in terms of focus on infrastructure, focus on the right expenditure. For that matter, as Anshul highlighted, focus was on capex versus opex, which I think is a very credible way of spending money, where you are creating capacities for the long-term growth of the economy. And also, by the way, mind you, there was a big incentive, by the way, for the government to roll out some money to the rural sector, etc. uh, because of the upcoming elections, by the way, in a few big states. So, despite that incentive, they did not go ahead and dole out freebies, so to say, to any particular sector of the society. And they have been disciplined in terms of focusing on capex, the right things. And by the way, no bad news is a good news. So we saw
Yes.
there was no increase in long-term capital gain tax rates. All the tenor for LTCG accounting for equity markets, for equity investing, which some people said that could go up from 1 year to 2 years. So from that perspective, I believe it was a pretty good one. No bad news is a good news. And lastly, I think if you look at the focus of the budget, uh, there were a lot of small things announced. Let's say on the digital initiatives front, be it taxing of the digital currency for that matter, uh, digital reforms in healthcare, in education. These are some of the initiatives, even from a posturing, the way the finance minister presented the budget, she actually presented it from a tablet and not from a written speech. So the focus is digital, and that's, I think, again a credible one. They are talking about introducing core banking system for post offices, 1.5
Post
lakh post
offices, yes.
offices. So, so I think all these things lead to a fact that there's a lot of consistency in what they are thinking, and I believe they are thinking in the right direction. And lastly, if I were to just add, if you look at the budget math, it is very conservative. If you look at the expectation of the tax growth, nominal GDP growth, which has been considered for FY23, it is around 12%, while the street estimate was 13 and a half. So therefore, the tax revenues that they're expecting for FY22 as well as FY23, those are on the conservative side. So I believe they would do better than the fiscal deficit number that has come out, which is 6.4. I believe they will do better than that.
Great, great. Thank you, Vishal ji. Shushmit ji, so what, according to you, were the big hits and misses in the budget?
Right. This could take the next 15-20 minutes of the session. So I'm just going to keep it
Oh, short time.
short.
Just for something like
You
for
know,
us to understand.
the first thing, whenever I look at the budget, I look at the nominal GDP, right? Because that's really the first document which gives us a good feel. And I think FY22 is a landmark year because we will cross the $3 trillion mark, which will make us the fifth largest economy in the world. So to me, that was the biggest hit that came out. We will actually cross UK maybe after 250 or 300 years in terms of GDP size.
Yes.
So that's, I would say, the biggest positive for me. The second is this is the second budget in a row where we don't have to bring out the microscope, right? Otherwise, before this, every time the budget would come, all the economists, all of us would take out the microscope and see where they have hidden away some expenditure, where they have farmed out some budgetary support, etc. This is the second budget in a row where actually you don't need a microscope. I call this the telescope budget and not the microscope budgets that used to be the trend in India 2 years ago. Which is again very important. One of the most important things in this budget that they have done is they've actually taken the extra budgetary resource, into the budget, right? So that is a very big plus. So whatever spending that now happens from the government actually happens through the budget, right? It's not how it used to be. And lastly, the biggest hit, just the signs of times is this is the first budget again in a decade, I think, where there is no provision for capital infusion in PSU banks, right? So, I think, these are some of, I would say these are the markers of long-term reforms that you undertake, and this is the fruition of it, right? Imagine no capital infusion in PSU banks. If somebody had told you this 4 years ago or 5 years ago. So this is what I would say to me are the very, very broad macro hits of the budget. Misses, I think the biggest miss that is coming out for me is government doesn't know how to spend the money. Right? I think that is clearly the message coming out, because the cash of the government with lying with RBI is now touching 5 trillion rupees. They have rolled in all the extra budgetary support into the budget, and still the fiscal deficit. And after, as Vishal said, they've been super conservative on tax revenues, and despite that, the fiscal deficit is under control. So I think government is probably cautious. I mean, we should not forget COVID is still around, right? Maybe the government is still cautious. So that is, to me, I would say, the biggest miss, which is how do we spend the money? How do we spend such a large amount of tax buoyancy that we have?
Right. Thank you, Susmit. Amitji, what's your take on this budget?
Ankaji, we were going into the budget. Good evening, everyone. We were going into the budget with no expectation. We've come out of the budget being happier. There's been nothing, no large taxes on the rich. It's been pretty much the same. I'm happy to see that corporate tax revenues, corporate tax has done well. We're now at the same level. After the tax cuts, we're still at the same levels so in 2019, before we had the tax cuts, the corporate tax revenues were 6.5 lakh crores. Now we've reached broadly the same number this year, even after large tax cuts on the corporate tax. The budget was a decent budget. It was probably, this is my understanding, that today the finance minister seemed poised like a proper leader. She knew what she was doing, and she's got it right. No large tinkering with the economy. She's already announced large PLI programs of 2 lakh crores last year. The game shifts to execution. They've got the divestment thing right. At least the first divestment we've been seeing for a very long time. They've got it right with Air India. I hope they can get it right with LIC and all other. And they've been very conservative with 65,000 crores of divestment target, right? So if they can get BPCL or a few more things going on for them, as Susmit ji said, you'll be very surprised with the fiscal deficit number. It can be probably below 6% also. So it may surprise the street, but the economy looks like a growth economy right now. So I don't see any problem. So the biggest risk to the markets that's what we focus on was Fed and not the budget this time. And yes, so now the Fed is very clear. The budget's out of the way. So there are no large events for the markets per se right now. It focuses back to earnings growth. So everyone's going to forget the budget tomorrow, and we move on back to the markets, back to earnings.
So it focuses back to earnings. Right. Very true. So my next question to Anshul ji, again to you. So India's economic growth in the current year is estimated to be 9.27%, the highest among all economies. How do you foresee the next fiscal? So how do we grow?
If you look at the tax buoyancy, and in fact, when I was watching the budget speech, I was surprised when the minister said that I'm going to go out of the text of the budget and announce something that I've got to know today morning itself. And she mentioned that the GST collection for January is 1,40,000 crores, the highest number ever. That is just an indication of what are the kind of tailwinds that the economy is seeing on tax collection. Particularly on GST, I think the revised estimate for the current year is 24% growth, and the budgeted estimate for next year is about 16% growth. Now, that itself tells you that there are significant tailwinds in the economy. Aside from the budget, if you look at some of the banking sector results and other company results, other than the one aspect of inflation eating into gross margins, and that is temporary because companies take some time to pass that on to their eventual customers. The body language for the next year is very strong. The demand patterns are very strong. Banking sector credit growth is only just starting to pick up, and the outlook for growth next year is again very strong. All of these indicate that the economy is on a very strong footing. The 9.27 number clearly is indicative of that. And maybe in the range of 8 to 9% is what one can assume for the next year. I recently the IMF number had come out, the estimate for next year. I don't recall exactly what that number was, but it was somewhere in that range. And that will be a very healthy number given where our peers are. We are at a situation where most of the emerging market countries are actually growing low single digit or actually degrowing. And in that context, with India growing at this pace is very strong. Is a very strong indicator of how the country is poised, and it will attract capital. The other thing to mention here is that progressively with the PLI schemes and government allocation towards that, we are going to see more manufacturing-led growth, and the capex cycle, which has been tepid for the longest time, is likely to come back again next year. Government has, with 750,000 crores kind of allocation to capex, government has given a primer to what can happen, and they're egging on the private sector to actually come in and spend. And if we do see manufacturing-led growth as also capital expenditure picking up, those will be, long-term drivers for growth, not just for a year or a few quarters. But once that wheel sets in motion, it doesn't stop easily. It takes some time before it stops. And so those are some very heartening signs that one is seeing. Even the government through this budget is indicating that and putting its money where its mouth is.
Great. That's quite positive about it, actually. Vishalji, you see the revised fiscal deficit for the current year is estimated around 6.9% against the projected 6.8. So that's not deviated much. The fiscal deficit in 2002 2003 is expected to be 6.4% of GDP, and targeted fiscal is around 4.5% by 2025-26. So what's your view on this? Will this be
Right.
possible to do?
So, Sankha, as I mentioned earlier, I think there are upside risks to the fiscal deficit number for FY23. As some of the other participants, Susmit also mentioned earlier, that the government, one of the negatives could be whether the government would actually spend the capex that they have decided to spend for FY23. The same is true for FY22 as well, where the capex spending to be done in the next 2 months, which is Feb and March, is pretty big, which they may not be able to do. So the risk of they underspending the capex is there, and but on the flip side, on the positive side, it will lead to a lower fiscal deficit number. If you look at Sankha, if you look at just zoom out a bit and look at the last 3 years for that matter, rather than on a year-on-year basis, while on a Y-on-Y basis also, we saw a massive increase of 35% in terms of capital expenditure budget estimate for FY23 at 7.5 lakh crores. So it looks to be a big number versus 6 lakh crores budgeted for FY22. But if you, which is a revised budget number, 6 lakh crores. But if you just zoom out and look at FY29 for that matter, in 2019, so over the last 3 years, this number, capital expenditure, has actually moved up from 3 lakh crores all the way to 7.5 lakh crores, which is more than 2x. Similarly, if you look at the road sector, where the budgeted construction of road kilometers is around 25,000 kilometers of roads for FY23. And if you look at this versus 2019, that number was around 10,000 kilometers for the full year. So 10,000 going to 25,000. And so is the case with the entire capex going up from 3 lakh crores all the way to 7.5 lakh crores. I think there are downside risks. There are risk of undershooting this, and and uh, and consequently, on the flip side, you might have a conservative this thing. So far as the glide path is concerned, Sanka, as you mentioned, 4.5% to be achieved fiscal deficit number by FY26. I think that will require a 50 basis points adjustment on an annual basis as we move forward, and that I believe is doable if there are no macro shocks that we saw in the economy because of COVID or some other macro shocks globally. If they were to come, then it might be difficult to achieve. But on a steady state basis, I think reducing fiscal deficit by 50 bips every year, I think is very much doable.
Shankar,
Hope
if you
that
permit
happens.
me,
Hope that happens.
Shankar, if you permit me, I'll just weigh in here for a minute. जैसा विशाल जी कह रहे थे कि 6.4% फिस्कल डेफिसिट नंबर थोड़ा कंजर्वेटिव लग रहा है. अगर हम टोटल रिसीट्स देखें हमारा जो कि नेक्स्ट ईयर का बजटेड एस्टिमेट है, तो वो टोटल रिसीट्स ग्रोथ सिर्फ 6% का दिखाया है इस टाइम बजट में, जो कि उससे पहले के साल में मतलब FY22 में कुछ 27% का टोटल रिसीट्स है. और इसमें अगर इसको थोड़ा ब्रेक करें टैक्स रिसीट्स में और जो नॉन टैक्स रिसीट्स है, तो हमारा जो टेलीकॉम का रिसीट्स है वो पिछले साल में कुछ 72 या 75,000 करोड़ का था, जो कि नेक्स्ट ईयर में बजटेड रिसीट है कुछ 53,000 करोड़. सो 20,000 करोड़ कम हो गया वहां पे. और सेकेंडली अगर हम जो डाइवेस्टमेंट का रिसीट्स है वो देखें, तो वो कुछ 75,000 करोड़ का डाइवेस्टमेंट रिसीट्स लास्ट ईयर का बजटेड है FY22 का, और नेक्स्ट ईयर का वो नंबर रिड्यूस होकर 55,000 करोड़ हो जाए. अगर हम सिर्फ एक ही डाइवेस्टमेंट देख लें जो कि LIC का है, उसमें हमारा कुछ 75,000 to 1 लाख करोड़ का डाइवेस्टमेंट नंबर आता है. तो या तो वो इस साल में ही हो जाएगा तो फिर 55,000 करोड़ रीजनेबल नंबर है, लेकिन अगर वो नेक्स्ट ईयर में जाता है तो 55,000 करोड़ तो बहुत कंजर्वेटिव नंबर. इस वजह से फिस्कल डेफिसिट नंबर 6.4 का हमें काफी कंजर्वेटिव लगता है. हो सकता है कि वो बिकॉज ऑफ टैक्स रिसीट्स और बिकॉज ऑफ नॉन टैक्स रिसीट्स दोनों की वजह से वो हम ओवरशूट करें. और आज जो बॉन्ड यील्ड्स ने भी किया है कि सुबह खुले 6.4 पे और बाय एंड ऑफ डे 6.9 के आसपास थे, तो वो इतना यील्ड बढ़ गए वो इसी वजह से क्योंकि बोरोइंग नंबर कुछ 14 लाख करोड़ का एस्टिमेट आया है. वो बोरोइंग नंबर भी हमें ऐसा लगता है कि वो उतना शायद ना आए. इस वजह से यील्ड्स में भी थोड़ा सा मतलब अपसाइड पॉसिबिलिटी है, और जो टोटल रिसीट्स नंबर है और फिस्कल डेफिसिट नंबर है वो भी उसमें भी अपसाइड हो सकता है.
Great, thank you very much. I think basically अभी सिंपल लैंग्वेज में ये कहा जा सकता है कि लोगों के गवर्नमेंट के पास पैसा है और कमाने का भी जरिया है. So we are not a poor country anymore. We are growing quite good in simple way. So I'll put this question to Susmit. तो आज के बजट के बाद कौन सा सेक्टर अच्छा लग रहा है? कहाँ पैसा लगाना चाहिए? ऑफ कोर्स पूरा इंडिया में लगाना चाहिए, बट कहाँ लगाना चाहिए आप बताओ.
या आई थिंक वो राकेश हमेशा बोलता है कि पहले आप रेस्टोरेंट में तो आओ, फिर देखिए डिसाइड करना कौन सा कुजीन खाना है. अभी तो इंडिया में काफी लोग रेस्टोरेंट के अंदर ही नहीं आए हैं. उसके पहले आपको ये जानना है कि कौन सा चाइनीज खाएं या इंडियन खाएं. बट
आजकल तो वी आर ऑल इनटू द डिजिटल वर्ल्ड. वी यूज आवर स्विगी एंड जोमेटोज एंड वी क्या चाहिए देखो ढूंढो, रेस्टोरेंट का लिस्ट आ जाएगा. पहले जमाने में आता था रेस्टोरेंट में घुसो मेनू मिलता है. अभी क्या चाहिए वो सप्लायर्स मिल जाएगा, क्लिक करो घर के दरवाजे में आधे एक घंटे में.
Right. I think jokes apart, the sectors that we continue to like are financials. मुझे अभी भी लगता है कि लास्ट 6 साल का एवरेज क्रेडिट ग्रोथ इंडिया में 10% रहा है. हमको लगता है कि वो कभी वापस 15 या 25 नहीं होगा. but we've had 25% credit growth for 7 years in India. हम भूल गए हैं वो, right? जो हमारे साथ लास्ट 5 साल में होता है हमको वही याद रह जाता है और वही ट्रेंड लगने लगता है हमको. But हमें लगता है कि क्रेडिट ग्रोथ विल कम बैक विद अ बैंग. अगर इतना केपेक्स होगा, हम बात कर रहे हैं कि इतना केपेक्स होगा, गवर्नमेंट भी पैसा डालेगा, फिर प्राइवेटर भी आएगा, इन्फ्लेशन भी है. ये एक चीज हमेशा याद रखना चाहिए कि जब इन्फ्लेशन होता है तो वर्किंग कैपिटल साइकिल बढ़ता है. वर्किंग कैपिटल साइकिल बढ़ता है तो आपको लोन लेना पड़ता है, राइट? सो ऑल फैक्टर्स पॉइंट टुवर्ड्स क्रेडिट ग्रोथ कमिंग बैक. Asset quality is no problem. Touch wood, I think that is now a thing of the past. तो अगर आप सोचिए एक बैंक का P&L अगर आप बनाओगे तो क्रेडिट ग्रोथ आएगा और प्रोविजन नहीं लगेगा, देन इट इज एक्चुअली अ ड्रीम P&L, राइट? मुझे अभी भी याद है, अगर आप 2000 मे बी 5-6 का SBI का वन ऑफ द क्वार्टर्स, उनका प्रोविजन वाज नेगेटिव. आप सोच रहे हो, which means that they actually had a provision right back, right? We have seen in the last 4 or 5 years provision being more than operating profit. The loss, the loss comes. But there have been quarters where provision was actually negative. So we think that those times will come. So that's why we are very, very bullish on lenders and financials. That is one sector. Second sector is
Kotak this quarter.
Sorry, Amit. Go ahead.
Kotak had that this quarter. Kotak had a negative provisions of 100 crores this quarter.
Yeah. So that there you go. Kotak had, I think, Catholic City, CSB Bank.
I could hear you.
I said Kotak had a negative. So Susmit was speaking about negative provisions, right? Where you have a write back, where you have more recoveries than what you are providing for. That is what happened in Kotak this quarter.
Yeah.
Okay.
Yeah.
It has happened for one more bank, a smaller bank of South India. So you can see that trend happening. So that is one space. The second is, consumer discretionary, connected to real estate. We think that is another whole space that will do very well. We have been selling 2.5 lakh houses in India per year for the last 7 years. And if real estate boom is here and like how everybody is talking, then this 2.5 lakh houses should go to 5 lakh, 6 lakh houses. So anything connected to real estate that goes into a house, whether it be tile, ceramic, sanitary ware, you name it, that is the other segment that we are bullish on.
Great. Amit, what's your take? आपको क्या अच्छा लग रहा है?
Ranka, we are super positive on technology, the services side. Even on the consumer tech, sometime they will bottom out, and sometime. But we need to the ones who start where the expectations of profitability starts coming in. These are very long-term stories, and that is where hyper-scaling and hyper-growth and hyper-market cap creation will happen. There are only 3-4 sectors where market cap creation happens, Sankaji: consumer, financials, technology, and pharma. Those are the only 4 sectors where we invest. So we do not do commodities, government stocks, all that. We don't do it. That's our fundamental way of looking at things. So coming to the consumer side, we believe real estate and retail. Real estate, there are 3 ways to play real estate. One is via housing finance companies. Housing finance companies we would not buy right now, because if you see the 10-year bond yield is higher than what loans at which Kotak is offering you housing finance, right? Everywhere you go in Bombay, you'll find holdings of 6.5% interest rate, get a home loan. Today, any bank can basically invest in the 10-year bond yield at 6.82% and make more money there. So why would anyone do housing finance? So all I'm saying, if you bet on a housing finance guy, the spreads right now are too low, especially in the tax-paying category. You'll have to go to the subprime category to make money in the housing finance segment. The second way of playing real estate is directly buying real estate developers. The problem in real estate developers is if you make money in 10 projects, but if you lose money in the 11th project, all the money that you made in the first 10 projects goes away. So that is one segment which is good but risky. The third way is to playing via real estate ancillaries. Okay, these are monopolies. These companies grew well even when real estate was suffering. So everywhere you look at tiles, you look at Wires and cables, you look at paints, there is very clear the market leadership out there. You will get that 20-25% growth in these kind of names easily. So that is one sector that we are looking at, the real estate ancillaries. Technology services should grow at 15% large caps and 20% on the mid cap side. Those are, and then retail, of course. Retail, you've got leaders in jewelry, you've got retail leaders in grocery, you've got leaders in QSR. These are very long-term bets, the Sankhaji. And these 20-30 percent corrections which have come right now, these are amazing opportunities to get into these names, because the growth rate will still be 25% this year in most of these companies. 20%, 25%, like a Titan will grow 30%, DMart should grow 25%. So those kind of companies will still have
Amit,
that
coming
25%.
to that retail, especially you spoke about the jewelry company. I heard there is some, I'm not so sure, but some tax benefits given for gold and diamonds. Is it so?
So it's on diamonds. I also heard there was some tax breaks on diamonds, but that was on the export, on the import or the export side. So I didn't clearly understand that.
Okay.
So it was not on buying on the retail counter. So
Okay,
there
okay.
is nothing.
It was a benefit given for imports of cut diamonds. The duty over there was brought down to 5%. And on artificial jewelry, an incremental tax was applied to the extent of rupees 400 per kg, because that is a very low value item and that can be actually manufactured in the country. And so on that, there was an incremental tax which was applied.
Okay. So great, Amit. So Anshul, what's your take? What are your favorite sectors to pick up?
You see, the budget is just a one-day event, and these companies are running in a continuum. So you're looking at it at the companies and at sectors basis what you think their long-term potential is, irrespective of what happens on a particular day. And in that context, we have to keep in mind quality as also valuation. And taking all that into consideration, we believe that the financial sector, which has been a dog for the longest time, I mean, in the last year, it has been an underperformer. And on credit growth, this sector has really not seen much credit growth for the longest time. We think that the larger, well-capitalized franchise players are actually going to be big beneficiaries of the credit growth that is impending and which we will see in the coming few quarters and years. As someone earlier mentioned, that if there is a capex cycle which is in the works, then it is these financial companies, banks, etc., which are going to be addressing that capex cycle by providing capital. So we are positive on the banks, but of course the well-run larger banks. It may also be interesting to look at the PSU banking space, because in that space, our belief is that the NPLs have peaked and growth has also bottomed. So if you put those two things together, along with valuations, valuations don't have any expectations built in, and so that space may be in a sense, a special situation where you could actually see outsized returns in the coming future. In addition to that, we are very positive on the real estate space, and we think that the cycle on real estate has only just started. And because of affordability, real estate has legs, multi-year legs, starting now to the next few years. And because a number of developers have gone out of business, the developers who remain are really the strong ones with strong balance sheets. In addition, the ancillary companies, building material, home improvement, etc., those stand to benefit immensely from this consolidation. So that space looks very interesting to us. Tech, while in terms of demand patterns, there is significant tailwind, but that sector has re-rated meaningfully. And so one would have to take stock-specific bets much more than top-down sectoral bets there. Pharma is a sector which has been an underperformer last year, and we think that it may come back with a bang in the coming year and beyond. And there we are, there are opportunities in that space to benefit from these tailwinds. Those are some
Interestingly,
segments. Yeah.
interestingly, like you spoke about pharma, Anshul. Interestingly, I've observed like in the high interest rate cycle, generally pharma stocks tend to do well. So if we land up getting into that zone, so maybe it will help.
You may be right, Shamka, but you see, a high interest rate environment is also a progression. So if you look at the last large capex cycle, say between 2003 to 2008, in that period, interest rates went up between 4 to 5%, but so did Sensex move from 3,000 to 21,000. So this is a progression, and in that progression, things don't happen immediately. It takes, there is a sort of a crust point after which things change. But in that period, you do see trends which are quite contrary to what conventional wisdom tells you.
Right. So Vishal, what's your take on the sectors? Which are you betting on this year?
Yeah. So I think a lot of the right sectors have already been covered by the other participants. But let me just share with you my view of what we as a fund house actually came out around 6 8 months back with a very detailed study on the themes that can play out over the next 3 to 5 years. And I think those themes are quite relevant, and the budget reinforces those themes. Uh,
Yeah.
and that's where we believe we will put our money. And the broad cat- four categories of themes that we are playing include digitalization, sustainability, real estate, and domestic manufacturing. And these are the four broad themes. Some of these have already been covered by the previous participants. So let me actually elaborate on sustainability, which we believe is something that uh, has not yet been discussed, and that's where we are really positive. So on that front, we believe that there are multiple ways to play this theme. It can be through green mobility, green energy. It can be through green chemistries, and we have already seen in the marketplace that investors have become really discerning about where they are investing their money into, and what are the long-term prospects of underlying businesses. For that matter, we have seen traditional two-wheeler companies in Indian context trading at very, very cheap multiples. If you look at the US markets, the traditional four-wheeler companies, if you look at the cumulative market cap of all the traditional four-wheeler companies, that is not even half of what Tesla is valued at today. So that clearly investors are appreciating, recognizing this fact, and valuing it accordingly. We believe this is a long drawn process and there are multiple legs to it. And that's where we believe one should focus on uh, the right technologies which will be the winners of the future, be it in mobility or energy for that matter, be it solar, wind, or the use of energy for that matter, ethanol versus traditional fuels, and also green chemistries, which has not yet been talked about much. But if you look at the chemical companies, by the way, in India and globally, there are green ways of manufacturing chemicals. And let us not forget, manufacturing chemicals is an extremely polluting
Very
industry, by the way.
polluting.
Yeah. So if we are able to identify uh, the uh, the right manufacturing process which is less polluting, then that can add tremendous value, and that's what is something that many Indian companies, large chemical companies, have been able to do and demonstrate by showing very, very less affluent outflow, which has led to the company's products being accepted worldwide as green chemistries, and they have been able to fetch 20 30% higher price for the same product if it was manufactured through green chemistry route. So those are the areas that we are very positive on.
Great. I think I'll now start taking up some questions from the audience. So, okay. I think Vishalji, can you just mute yourself? I think you have two speakers on right now. No. Is it better now? Yeah, I think the echo was coming from you. Yeah. So the first question comes again. What would be the change on long-term capital tax above 1 lakh? So I think Susmit has already answered that in our chat, internal chat. So there is no change in tax. So
I mean,
Amit
we are still
also
going
has
to the
answered.
fine print. So if somebody has spotted something, then
No, I think over here, maybe I'll add a bit. On the long-term capital gain tax front, the announcement which has been made is that the surcharge is capped at 15%, which means that if the long-term capital gains, and this is predominantly for HNI investors, if the LTCG amount exceeds 1 CR, and sometimes the surcharge goes up beyond 15%, in that case, it will be capped at 15%. So that's the only proposal I am aware of.
And there are no other changes for retail investors.
Yeah.
Then, Vishalji, if you can just mute, it's echoing, I think. Okay, now the next question is Bitcoin income taxed at 30%. When will it start from? FY 21-22 included or for the next fiscal?
normally all finance bill gets affected from the next fiscal. So one should
Next
assume.
fiscal only.
But the next fiscal, it's hard to anticipate any Bitcoin gains since Bitcoin has actually fallen quite a bit.
Yeah. I personally don't track that much. Please talk about how budget has benefited salaried employees.
See, if the economy grows, your salary will grow. That's the only benefit that I can speak about.
I only know one thing, that one, my take home March is going to remain the same. So based on my performance and my organization's performance, I may get a hike. And investing in India, so as in my hike grows and my hike also gets multiplied. So I think salaried people, for them, this is a good thing. Not much of changes actually. And yes, about which sector is going to grow, we are covering that. Now, considering all this, do you expect see, right now the party is still on because the budget was sort of beneficial for everyone. So everyone got benefited and the finance minister did not spoil the party, to be honest. But now there are two other spoilers which we are very scared of. One is the Fed rate interest rate hike, which they will come up hopefully by March. And also not just Fed, the other central banks are also going to look, they're also looking at increasing their rates. So that's the first one. And the second one is the siren of war with Ukraine and between Ukraine and Russia. So how are they going to impact our economy and how can we safeguard our own personal savings? Any one of you
If I
can
can take, yeah, if I
Sure.
can take this, actually, for investors, 2020 was a very indicative year on how to approach the market. Now, you had a once in a century event, which is COVID. It clearly spooked most of the markets. I can tell you that I had no vision into how things will pan out 6 months out. I would assume that most fund managers or even knowledgeable people did not have an understanding of what would happen. But whoever stayed back in the markets actually benefited. Whoever became smart by getting carried away by or prevailing emotions, essentially because the markets rallied the.
Anshul, we are unable to hear you. Anshul?
I think there's some network issue at his place.
Okay.
Okay.
So any of you can answer that.
Any of you can answer that.
So Sankhaji, in my humble opinion, the voice is echoing. But hello. Yeah.
Yes, Amit.
Yeah. So the questions about the Fed, what's the impact of Fed hikes and other macro political things that are happening? So the bubbles already. So the best case things have happened. If you think about it, what has happened in the last 1.5, 2 months in the U.S. market, the high growth stocks, which used to grow at the hyperscalers, basically have topped, and you have the piper of the last bull market in the U.S. That game is over. The game of the high growth loss making company investing game is over. The SPX, the S&P is down less than 10%. So automatically there's been a large bubble burst. Yet the SPX has fallen less than 10%. The S&P has fallen less than 10%. You saw Apple, like Netflix was trading at 70 times. It's got corrected by half, and now since the growth rate of Netflix has come down, even the stock prices have corrected. Apple came out with good numbers. The markets rewarded Apple. MSFT came with good numbers. The markets rewarded MSFT. So broadly, when you look at the US market and what they are doing, the bubble part of the market is corrected already in the US market. It's basically game on. Like whoever shows good earnings will start showing decent this thing. The stock price will keep moving higher. It's not about tech, non-tech. It's about that people went overboard. There were funds which were making their own T-shirts in the US. When those kind of things happen, the market corrects on the opposite side, and that has corrected. That overvaluation in the so-called innovation stocks has gone about, but good companies are still doing well in the US. The economy of US is very strong. They showed 6.5% growth. The bond yields will basically you will have to see rate hikes in the US, but it's nothing very bad. Fed is very smart. They don't do something which is out of the box. They'll tell you 10 times before they do something. Virtually everyone will know what the next move of the Fed will be. So that
it's all basically factored in the price right now.
Yes. So about 4 hikes at least this year. So if you look at the 2-year bond yield, the 2-year bond yield in the US has gone to 1.2%. It tells you about 5 rate hikes are already priced by the market. Now, if it goes to 7 rate hikes, which is the worst case is 5. The best case is 4 rate hikes. The worst case is 7 rate hikes based on multiple reports. 5 rate hikes have already been priced in by the market as of today, looking at the 2-year bond yield in the US. So yes, but and the geopolitical thing that will keep happening 10 times for the next 10 years. You will have Ukraine, you will have some other country, you will have you don't even it doesn't matter beyond a point. You'd have no control over those things. For us, it's like Jeena yahan, marna yahan, iske alawa jana kaha. So for us, we will stay invested in the game. Whatever comes, if Modi is the prime minister or Mayawati becomes prime minister, if Joe Biden is a president or Donald Trump is president, if it crude as $40, $20 or $120, we have to stay in the game. Of course, we keep shifting our position here and there a little bit, but you need to bet on good companies which you believe will grow earnings and be diversified across. So you don't have to worry too much about these events. No one can predict these events any which way.
Right. And Anshul, you was telling us about the Indian crash and how people who had invested that point of time would have got benefited.
Yeah, and they would have been benefited, and even those investors who are not investing in individual stocks, for them, asset allocation is imperative. Rather
Yes.
than worrying about what is happening globally and hence whether markets will go up or down, allocating assets to various asset classes or capital to various asset classes becomes imperative. And in that aspect, one has to ask oneself, what is the risk? What is the risk that that person can assume? If the risk taking ability is low, then go to the extent of 20 to 30% in equities, rest in other asset classes, majority in debt. If risk taking ability is high, then maybe 60, 70, 80% in equities and the remaining in debt. That's the way to look at it, rather than predicting these events and predicting market moves basis these events. As I had mentioned earlier, COVID happened, and whoever predicted that because of COVID markets will go down further actually lost out on opportunity because the markets went up. It was a war against an invisible enemy. If a Ukraine Russia war happens, it will be a war against visible enemies. And the natural tendency of central banks when something like this happens is to loosen purse strings and actually throw a lot of capital into the market. So, contrary to what one believes, actually wars can be positive for the market.
Great. Now, Vishal, I'll ask this question to you first. How do you think one should manage risk? Like Anshul said, that look at the asset allocation model based on your risk appetite. Amit said that it's already been factored in. And how about you? What would be your way of managing the risk?
Yeah, I think, Sankar, firstly, we need to recognize that the known risks are, are many a times priced in, and the fear of known risks playing out and spoiling the markets, that actually doesn't happen. It is only the unknown risks which are not in the domain of existence today, which come as a surprise and take the markets down. And whenever that happens, uh, the response time available is very, very limited. So think of, let's say, now Fed tapering we are talking about for the last 7, 8 years. The Fed tapering first started in 2013. So when it
Yeah,
started first, it was a big surprise to the markets, and the markets corrected 25% in the subsequent 6 months. Post which we are talking about Fed tapering over the last 8 years, that has not been a big worry because that's something which is in the stream of known risks. Similarly, if you take an example of inflation, interest rates, which we are talking about, inflation is on the rise. Can the interest rates go up? Fed rate hike, for that matter, it comes into the stream of known risks, and that's where we believe, as a house, we believe that the impact has already been priced, and we agree with Amit on that. So far as risk management is concerned, I think there is no other way uh, better than having a disciplined asset allocation, which means that one has to stick to the plan, no matter how the market behaves. If one becomes fearful when markets are down during the COVID bottom, then the investment, the returns go for a toss just by one decision of creating cash at the bottom. So those are the things I think one should be cognizant of. And also, Sankar, just to add on this the Russia-Ukraine issue, I think one new aspect which has come from an India context is that while people are saying, what if the crude flares from $80 to $120? What happens to India? But I think things are different this time around versus, let's say, a few years back, 5 to 8 years back. If you look at the budget math today, and if you look at the subsidy for fuel, for that matter, that has come down dramatically.
absolutely. Absolutely.
So, which means that today we are not subsidizing fuel as an
Yeah,
economy, as a country. So, if fuel were to go up from $80 to $120, and if we stick to our policy of not subsidizing, what it means is that the retail prices go up, which they have, by the way, gone up so much. and which means that there will be natural demand response. If the prices go up too much, then the demand will come off. So
Yes.
that demand response will
We'll
make
work
sure
from home.
same. So I think that's something different. Globally, we have
Yeah.
seen whenever crude prices go up, globally the crude consumption comes down, but not in India earlier because government was subsidizing it. But now that
Right.
is not the case.
Thank you. Susmit, to you. Mid cap, small cap, yeah, large cap. What's your take post budget?
Tino, right?
Tino,
I mean, there is.
Nifty 500.
देखिए, I have two thoughts or my personal beliefs. Is when you buy a company, you judge a company, you like the company, you buy the stock, right? Company doesn't know whether it's large cap, mid cap, or small cap, right? That SEBI tells the company, or we label the company like that, right? So a company doesn't know whether it's a small cap, mid cap, or large cap. So I think all of us on the screen here, we do bottom up stock picking. We don't sit and say ki we have to buy two large caps, three mid caps, and five small caps. If it happens to be like that, I think in 2017, if you were to come out and do stock picking, you would have struggled to find good value in small caps, right? Because everything was 2x more expensive than large caps. While on the other hand, we are now heading towards a zone where some of the mid caps, thanks to the way SEBI and AMFI classification is, where 70% of a large pool of money has to get invested in 150 stocks in India, the mid cap valuations are getting a little lofty. So first is, you we all look at companies bottom up, and if we like them, then we don't think about it small cap, mid cap, large cap. Secondly, as an investor, I've always felt that you should always have a mix, depending on your age, your risk profile. It can be 50, 30, 20 in favor of large caps. It can be anything, and keep rebalancing that every year, right? That is automatic movement of money from an inflated asset to an underinflated asset, right?
It's
So I
your
think
age minus 100. Are you talking about that thumb rule?
no, that rule has now got debunked.
Okay.
For various reasons. We can get into the math of that now, but I think it is whatever you decide to be equity, right? Whatever at Motilal Oswal, we believe 100% should be equity. So it depends from person to person. So whatever you decide to be your equity allocation, divide that into large cap, mid cap, and small cap, depending on what your financial advisor says, and keep rebalancing that every year. So if let's say you start off investing 50 rupees in large cap, 20 rupees in mid cap, 20 rupees in small cap, and at the end of the year you realize it becomes 40, 40, 20, then take some money off the mid cap, put it in large caps, right? So do that rebalancing kind of every year.
So how I mean, based on you, what model would you suggest to us, the retailers? Should we look at large cap 50, mid cap 30, and small cap 20? Should we keep that as an allocation?
Yeah,
And
I
then
would
every year keep rebalancing.
absolutely. I think you should go with that.
Is my
It is.
ratio correct?
Yeah, I mean, dekhe, investing is little bit like marriage, right? We all want to marry the best, but marrying the best may not be the right option, right? You have to marry the most compatible. So आपको जो compatible लगता है वो 50 30 20 रखो, 40 40 20 रखो, जो भी आपको compatible लगता है, the one that you can live with. Every investor will have a different feel, right? But stick to that allocation because it's a 20-year journey. It's not a speed dating, right? So what you're most comfortable with.
Great. So now, before we end our program now, I will ask a buzzer round. It's like a buzzer round, you can say. So I just thought of inverting it. So this is the first time I'm doing it. I may go right or wrong, but please, it's more like vote. So you've seen that KBC where you have that 50-50 thing. So 50% of the questions which will be right and 50% wrong questions will be moved out. And then you have the audience poll. So we are doing the audience poll. This time it's not the audience poll, it's the guest poll. So you are my guests today. Amit, Vishal, Susmit, Anshul. So you're my guests, right? So you will give me a poll with a thumbs up. Okay? Thumbs up. I think when you put your thumbs up, you have to put it up in front of your face, nearly close to your face at least. Because otherwise, the camera may, take that thumbs somewhere else. So, is it going to be fair? You just give a thumbs up, and we, the audience, will take it up from there. Okay? We'll take the clue. You don't have to tell us anything. It's like Tata Steel. So you can put your thumbs up. You have to put your thumbs up. You cannot put down. You can put down, thumbs down. You can put thumbs up, or you can just stay neutral. But you have to keep some idea. You have to show something with your thumb. You cannot put your hands on the side. I'm just giving an example. Tata Steel. So this is, we are not recommending it right now, but we are not going to take any stock names. That's for sure. But this is just for a mock drill. So let's say ICICI Bank. Anshul? So this is how we are going to do it, okay? Value investing. Growth investing in the current phase. Okay. So we have more thumbs up for growth. So let's look at the next one. Quality investing. So we have ETFs for that as well. So we have stocks for that, indices for that. So people can take up the clue from there. Okay. Equity as an asset class with more than 60%. So, okay. Gold as an asset class, more than 20%. Okay. So we have more than 60%. Okay. Equity as an asset class, more than 75%. Great. So we know we should keep at least 75% of our portfolio in equity. Our heart lies mostly with large cap, mid cap, small cap. So large cap, mid cap, small cap. So we have more votes. We have mixed votes here. So we have, our votes are distributed, well distributed, but less towards large cap and more towards mid cap and small caps. Now let's look at the sectors. PSU banks. Okay. Banking and financial services. Okay, great. IT index stocks. Stocks from the IT index. Okay. Great. So metals. Agrochemicals. Okay. EduTech. Technology-based education. Automobiles. Pharma. Okay, great. So thank you very much for your time, Amit, Vishal, Sumit, Anshul. Any last words from you? What would you tell us in one sentence?
मार्केट में
Sorry, Anshul, go ahead.
So we'll start with Anshul.
मार्केट में रहना जरूरी है, मार्केट में आना जाना जरूरी नहीं है, और वो करिए भी मत, क्योंकि आप टाइम नहीं कर सकेंगे मार्केट में। और ये एक दिन के इवेंट पे मार्केट में ना इन्वेस्ट करिए, ना मार्केट से निकालिए। मार्केट में जम के बैठिए। जितना पैसा 5-10 साल में मार्केट में रह के बन सकता है, वो किसी और एसेट क्लास में नहीं बन सकता। अच्छे फंड मैनेजर को ढूंढिए और उसको बैक करिए और उसको उसमें पैसा डालिए, लेकिन मार्केट में रहिए। अपसाइड डाउनसाइड दोनों आएंगी, लेकिन डाउनसाइड के साथ ही अपसाइड आएगी.
Yes. Vishal, any last words from you?
I think
Advice?
the most important thing is to be disciplined in terms of investing, and that can, as Anshul mentioned, that's the key to success.
Great. Susmit?
आई थिंक stay invested 20 साल में 16 गुना या 20 गुना कमाना है, एक साल में 50% नहीं कमाना है. That is the goal, to earn 16 to 20 times over the next 20 years. That should be the vision for everybody who's investing, and that is real wealth. You can get rich in 1 year, but you can only create wealth in 20 years.
Very true. Amit?
Yes, thank you everyone for being on the call. But yes, stay invested in all times. You'll have to go through good times, bad times. Be aggressive. You have to be aggressive and be defensive. You need to know that, and you should do okay. You know, the panel was right on asset allocation, on equities performing well. The more you learn the game, the more you're invested in the game. It's a learning curve, right, which develops over time. But this is a great asset class. This is one asset class where you have to stay invested. It's just like a business, right? Think about that. You've invested in a restaurant kind of business. You don't look at the restaurant every 2-3 months. You're investing for next 10 years. We are managers of that restaurant. You can of course choose many restaurants out here. Whichever restaurant you like, you go for it. But you go for it. You know, this business should do very very well over next many years. So this equity and betting on India should do very 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 well for next decade, 5 years, 7 years, 20 years. Yes, should do very well. But you have to stay invested in the game, in good and bad times.
Great. So for me, the takeaway, first and foremost, I mean, you all share the bottom-up approach, right? You pick up the stocks, and that's how you recommend clients. But as a retail investor, like me, who does not have time to do the bottom-up approach, I do the top-down approach. So my explanation to all the audience here would also be in a similar fashion. So first and foremost, do a risk profiling. So that's a top down. And do a good asset allocation where you have at least 75% in equity. And then in that 70, based on your risk appetite, of course, you should check out your risk appetite. Gold, you should have around 20% in your portfolio or less than that. That's what we learned. In terms of equity, look at mid cap and small caps. They still have a lot of steam in it, so they can still move up. That was the votes. Okay, you can invest in large cap, of course, based on your risk appetite. And these are not recommendations. We just played a small game. And of course, the sectors which people are looking at quite good right now is banking, IT, pharma. Also, we had some hands up. And of course, auto didn't come up, metals didn't come up, but these were the top 3 sectors where we had more thumbs up, right? So of course, like we have a disclaimer here. So whatever we shared here today, it's only and only for knowledge purpose, just to give you an idea of what's going to happen in long term, and the long term equity market remains the same, the way it was and the way it is going to be remaining the same. In the last 23 years of my investing career, I have seen budget is just I used to think that it's going to bring in a big impact. Impact was never that big. The impact was bigger. So the growth will remain at 9.27%. There is a big capex push. Gross GST collections has increased, which is one of the highest in Jan. That's the quad collected. And most importantly, my take home in this budget did not reduce. So I have more money to invest in the market, and I will keep investing. And if my brain doesn't work, simply what I'm going to do is buy those sectoral ETF which were recommended, buy those sectors completely, maybe through the ETF route or stock route, or taking an advisor and investing in the funds, right? So, but I will remain invested around 75%. The story of growth will remain the way it is. Thank you very much to our lovely panel. Thank you, Amit, Vishal, Susmit, and Anshul. And thank you, all you lovely people who attended our session today. All the very best and happy investing.
Thank you,
Thanks,
Shankar.
Sankya, for being an excellent moderator as well. Thanks.
Thank you.
Thank
Thank
you.
you. All the
Thank you,
best.
Vishal.
Thank you.
Safe, everyone.
Thank
Bye.
you.
Thank you.